There is a quiet line item on a lot of Australian tax bills that nobody talks about. It is called the Medicare Levy Surcharge. And if you earn over a certain amount and do not have the right private health cover, you are paying it right now. For a single on $160,000 with no hospital cover, that is an extra $2,400 a year. Gone. ATO 2025-26 on top of the normal Medicare levy. By the end of this video, you'll know exactly how to check if it is hitting you and how to stop it. Here is the number that matters. The Medicare Levy Surcharge can be 1%, 1.25%, or as high as 1.5% of your income. ATO 2025-26, that is on top of the standard 2% Medicare levy everyone pays. So if you cross the thresholds without cover, your effective health-related tax jumps to as much as 3.5% of your income. The frustrating part is that this is completely avoidable, and most people paying it have no idea. Let us talk about the stakes, because this is not pocket change. A single earning $180,000 with no hospital cover pays 1.5%, which is $2,700 in a single year. ATO 2025-26. A family on $330,000 pays $4,950. ATO 2025-26. Now stretch that across a career. Someone starting on $160,000 and never fixing it can easily pay $70,000 to $80,000 in surcharge over the long run. In today's dollars, that is a tax you are paying for receiving nothing in return. Let us make sure that is not you. Move one. Find out if you are even in the firing line. Log into MyGov, open ATO online and pull up your latest notice of assessment. Note your taxable income. Then add the extras the ATO uses to calculate income for MLS purposes. This is the trap that catches people. The ATO does not use your salary. It uses income for MLS purposes, which includes your taxable income, plus reportable fringe benefits, total net investment losses, and some reportable super contributions. ATO 2025-26. So someone who thinks their salary of $145,000 keeps them safe can be pushed over by a $5,000 bonus. Use the ATO's Question M2 instructions to add it all up properly. Now match your number to the brackets. For singles in 2025-26, $101,000 or less means zero surcharge. Between $101,000 and $118,000, 1%. Between $118,000 and $158,000, 1.25%. Above $158,000, the full 1.5%. ATO 2025-26. For families, the base threshold is $202,000 combined, rising by $1,500 per dependent child after the first. Find your band. That is your rate. Move 2. Confirm whether the health insurance you already have actually saves you anything. This is where so many people get blindsided. Log into your health insurer's portal and download your policy certificate. The single most important thing to check is whether it includes hospital cover, not just extras. Even with hospital cover, the excess matters. To qualify for the exemption, your policy excess must be no more than $750 for a single or $1,500 for a couple or family, ATO 2025-26, and you need to hold that eligible cover for the entire income year. If your excess is higher than the limit or your policy is extras only, you're still on the hook for the full surcharge despite paying premiums. If yours does not qualify, call your insurer and ask directly for an MLS-compliant hospital product. Move 3, and this is the one that saves money. Take your rate from Move 1 and multiply it by your income for MLS purposes. Write down that dollar figure because that is your annual surcharge. Then jump on any registered health fund's website and get a quote for basic MLS-compliant hospital cover with an excess under the limit. Let me show you with a real example. Meet Alex, 34, an IT project manager in Sydney on a $145,000 salary plus a $5,000 bonus. That bonus pushes income for MLS to $150,000, landing Alex in Tier 2 at 1.25%. The surcharge is $1,875 a year, ATO 2025-26. And here is the kicker. Alex already pays for extras-only health cover and assumed they were covered. They were not. For many people, basic hospital cover costs less than or similar to that surcharge. so you can swap tax for an actual benefit. Compare the two numbers. If the annual premium for compliant hospital cover is less than or close to your surcharge, the choice is usually obvious. Instead of paying 1 to 1.5% of your income to the ATO for nothing, you redirect a similar amount to a policy that actually gives you hospital cover. You avoid the surcharge and you get a real benefit. Just make sure the policy is in place across the full year so your exemption holds. Why does getting this right matter so much? Because the small annual hit compounds into something huge. If Alex stays on roughly today's path, never fixes the cover, and income grows around 3% a year, the surcharge over a 33-year career adds up to roughly $74,000 in today's dollars, based on ATO's published rates, ATO 2025-26. That is a stylized estimate and real outcomes vary, but the direction is clear. A tax you barely notice each year quietly drains tens of thousands over a lifetime. Before we recap, the two mistakes that cost people the most. First, assuming extras only cover counts. It does not. You can pay for dental and physio all year and still cop the full surcharge because the ATO only recognises appropriate hospital cover, ATO 2025-26. Second, judging your tier by your salary. Bonuses, salary sacrifice, investment losses, and reportable super all feed into income for MLS purposes. Alex thought $145,000 kept them in Tier 1. The bonus bumped them to Tier 2, a difference of $775 in extra tax in a single year, ATO 2025-26. Let us run it back fast. Step 1, log into MyGov, work out your income for MLS purposes including bonuses and reportable items, and find your tier. Step 2, download your health policy and confirm it includes hospital cover with an excess no higher than $750 for singles or $1,500 for families. Step 3, calculate your surcharge in dollars and compare it to a basic compliant cover quote. And never forget the two traps. Extras only does not count, and your salary is not your MLS income. If you take 30 minutes this week to run those 3 checks, you might find you are paying a tax for absolutely nothing. And you can fix it before the year ends. If this helped, subscribe to The Fine Print, where we turn confusing Australian money rules into simple steps you can act on. Next up, watch our guide on how income for tax purposes is really calculated so the ATO never catches you off guard again. Thanks for watching.